This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting Group is a multinational headquartered group based out India, Singapore, and Hong Kong. More importantly, we do have offices in three parts of the globe, and apart from that, we are 100% profitable. Unlike Ola, Uber, Swiggy, Zomato, Paytm, Byju's, Delivery, and many such companies, we are 100% profitable. Not a single dollar invested by any venture capitalist or a private equity firm. Neither we are interested in any investment by private equity or venture capitalist firm. Apart from that, we operate our own hedge fund, which is proprietary by nature. By proprietary, it means we do not invest third party capital, neither we take third party capital in our fund, which means whatever positions which we are taking, these positions are backed up by our own fund. They are not backed up by third party capital or anybody. Functionally speaking, our hedge fund covers FICC, fixed income, currency, and commodities, crypto, and other asset classes. Probably in due course of time, we would be adding more asset classes also. Apart from that, we have our learning platforms like Sheetal Academy, our paid news desk, and many more things. In case you wish to have any information, you can definitely WhatsApp on my personal number, which is +91 9899242978. I repeat, +91 9899242978. Alternatively, you can WhatsApp on our back office, which is +91 9818485155. Today, I would like to cover yet another topic which covers the anomalies in the Indian capital market. In this, I would like to be covering several points in a single video. So I go with step by step. As we speak, Paytm is barely 2 weeks old company as far as the listing is concerned. It is more than a decade old company, but as far as the listing is concerned, it is barely 2 weeks old company. They had substantial losses in their books. But as we speak, the annual report of the Paytm is not in public. Once it would be public, I would be checking one important thing, which is retained earnings. On a very often basis, I raised a concern that the most important parameter to value any startup is not the business. Because startup is not in a business which is not done right now. So whether this is Ola, whether this is Uber, Swiggy, Zomato, Lenskart, Paytm, Delivery, Nikia, Fino Payment Bank, or any other startup, there are thousands of companies who are into this business. Example, if we talk about Paytm, we have Amazon Pay, we have Google Pay. Of course, Amazon Pay in India is loss making. But if I look at holistically Amazon at a global level, it is a giant, huge profits, cash reserves, share price around $3,600, which is near about 2,40,000 rupees per share. Near about 2,40,000 rupees per share. This is Amazon. Now, if I look at Paytm, it is difficult to understand, rather impossible to understand how come they got the approval of the IPO. Several images were shared on the WhatsApp. I have a copy of few of them, in which Paytm clearly mentioned in the draft red hearing prospectus that our business model require extensive capital and we might be in the losses for upcoming years. After Paytm, American bank Mercury, their research firm, which is Mercury Research, published a detailed document. I have a copy and I'm reading this document one by one. And in this document, they have given a target of the Paytm 1200. And most importantly, this document is clearly mentioning that by 2025, which means another 4 years from now, Paytm would be a loss-making company. So if Mercury is saying that 5 years from now, Paytm would be a loss-making company, how come the regulator is not aware about the same? How did the Paytm IPO, whose revenue is less than 4,000 crores, and they never achieved profit, whatever business model you take, whatever business model you consider, they never achieved profit. How come they got approved? This is a big question. IPO failed drastically. In the first two sessions, the price fallen by more than between 35 to 42%. Regulator said they would be quizzing investment banker. Might be they have given some exorbitant statement about the stock price, which led to huge expectation and subsequent crash. Is regulator not accountable for anything? Why did Indian regulators always pass the responsibility to others? Why don't they take the responsibility that they failed again and again? Whether this is Satyam, PwC, whether this is Diwan Housing, Infrastructure Leasing and Financial Services, Yes Bank, PMC Bank, and on numerous occasions, Indian regulator failed. According to the public information, 10.8 lakh crores, you heard me right, 10.8 lakh crores worth of non-performing assets is being phased out by Indian banks in the last 8 years. This data is provided by Reserve Bank of India. So from financial year 14 till financial year 21, which means around 8 years, Indian banks phased out 10.8 lakh crores, which is near about 146 billion US dollars or 5% of Indian GDP. If I consider Indian GDP at near about 3 trillion. So 3 trillion worth of GDP, if I consider near about 5% of the GDP, is being phased out in the form of non-performing assets. Is regulator is not accountable for this? The only role of Indian regulator is to impose the penalties, because till now no one challenged them in the court. The day somebody stand up in the court, you will see the realistic talent of Indian regulator. The only thing is people not dare to stand against them in the court. Second important thing is, today when the market fall heavily because of the new variant COVID, you check any of my videos, whether it's a short video or a long video. From the last several months, I'm saying that don't take COVID lightly. It will take a hell lot of time to quit the world or eradicate from the globe. I have several screenshots provided by Bloomberg. United States, as we speak, is around 59% vaccinated. And when I'm talking about vaccination, it means double shots. It not including the boosters. Boosters is separate. We have no data for this. In fact, the countries like Singapore, who are boasting 80% of vaccination, 80% of the population is vaccinated in the countries like Singapore. Even they are facing around 2,500 to 3,000 cases in a day. which ends up near about 100,000 cases in a month. In a month. And please check it out on the Google. Now, today, when a news came that there is a new variant which detected in the South Africa, and the South African Health Ministry gave a statement on the Bloomberg. Subsequently, it got to know that the Hong Kong also reported the same variant, although the cases are less. Today is Friday. Probably by Saturday and Sunday, we'll have more information about this variant and we would let you know. As we speak, the World Health Organization made it clear that it will take several weeks for them to assess the actual situation of the variant and whether it will evade the immune system or not. Let it be honest. So, World Health Organization to me is the most competent authorities who can answer that. So, we need to wait and watch. In the meantime, if we find any credible information, we will definitely pass to you. Now, when this news came, Indian market fall like a free fall. 7.5 lakh crores. You heard me right. 7.5 lakh crores worth of wealth evaporated only in one day. Only in one day. 7.5 lakh crores. Is Hindi media accountable to them? Is regulator accountable to them? I am not mentioning any doctors, but I have seen many doctors in the very recent period who came on the Google and giving like third wave is not coming in India. The probability of coming a third wave is absolutely zero or very minimal. Situations like this, which in turn boost the confidence of the market that nothing of that would going to come. And result, the fake people in market will pump the money. They give the hype and stocks like Indigo and many other go up. Hindi media start giving the calls. Buy this, buy this, buy this. Eventually, a news came, market crashed, 7.5 lakh crores wiped out only in one day. Now the biggest question is who would be accountable to that? Today, thousands of investors who invested in FNO, future and options, index, stocks, they lost it. And if this trend continue, probably in upcoming week, whereby the probability is very high, with due respect, the mess is right on the cards. I'm telling you, mess is right on the cards. But Indian investor is not intelligent enough. Indian investor will only see that what this person is talking it about on the TV, probably on the media, and he just replicate his portfolio accordingly. He's not going to be using his mind. End result, Indian investors always lost. Third important part. It is said that mutual funds in India are regulated entities. But that's a big fake thing. Irrespective of that, Franklin Templeton mutual fund scandal happened. And if I tell you the fines which are imposed in Franklin Templeton case, it's not even a 1% of the total fraud which had happened. Not even 1% of the total fraud is the fine amount paid by the Franklin Templeton. And still, there are many issues. Investors are still facing to get their money back. And several thousands of investors quitted the day they got the news Franklin closed the schemes. Are they going to be repaying? Are they going to be compensated? No, they're not going to compensate. In Paytm, Aditya Birla Mutual Fund, Myre Mutual Fund, HDFC, and many other mutual funds invested. Many other mutual funds invested in Nike also. They invested in Fino Payment Bank also. Are these mutual funds approved to invest in loss-making companies? Is the mutual fund, say Myre or HDFC or Aditya Birla, Is the board giving the authority to invest the retail investor money in a loss-making company? Now, it doesn't make any difference whether ICICI, HDFC, Myre, or whatever, all 44 mutual fund from where they're getting the money. It's a retail investor money. They are not getting the money from Mars, Saturn, Universe, or maybe Pluto, or all these planets. They are getting the money from the retail investor on the earth. Now, it's a retail investor money. Is the mutual fund approved to invest in a loss-making company called Paytm as an anchor investor? I don't think so. Do we have a single document in the public domain which gives evidence that these mutual funds are approved to invest in loss-making companies? We don't have any document. If tomorrow Paytm collapses, Fino Payment Bank, Nike, then who would be losing the money? But on paper, mutual funds are regulated entity. And this really frustrates me. How come they are regulated entity? Because even in the case of Franklin Templeton Mutual Fund, and even previous to that, nothing has happened. It is simply formality which had happened. Guys, do you know now Franklin Templeton Mutual Fund is giving advertisement in magazines, in newspapers, and many other places. A fund who did a huge fraud, closed 6 schemes without any information, is giving advertisement in the public domain and enticing investors to invest in their fund. Isn't regulator is watching these magazines? Isn't the regulator have the I would say access to the newspapers, the magazines and all? They are waiting to let it happen. Fourth point, Upstocks. Do you know the Upstocks annual profit? Do you know the Upstocks annual revenue? I'll show you guys. I just need to go to my Twitter handle. And this is what I posted yesterday. Upstocks is having a loss of 38 crores in financial year 20, while they are having a profit of 13 crore in financial year 19. A loss-making company, just 38 crores, basically a loss of 38 crores, is now a unicorn. Do you know unicorn? Unicorn means the valuation is more than $1 billion. A company who reported a loss of 38 crores with sales of near about 148 crores in financial year 20, they are billion-dollar company. Thousands of crores worth of retail investor money is invested in this, I would say, Upstocks. Isn't regulator is watching this? Isn't regulator is aware that a company whose sales is merely 148 crores is a unicorn now? It's a stockbroking firm. It's a unicorn. And they are not the only example. Look at the Grow. Look at other companies also. By the way, Zerodha is really an exception. Hats off. It's a clear-cut signal that the complete system is compromised. And the system reacts when there is a big failure. Except that system never reacts. As we speak, Ola, Oyo, Flipkart, Delivery, and many other loss-making companies are coming. Fifth and important point. When the Paytm listed, it collapsed. Retail investors just offloaded their stocks. Eventually, it went to 1200 rupees, and from 1200, it went up. I was concerned that who is buying Paytm, so I decided to check with mutual funds. Treasury Consulting is a cash-rich company. We invest our cash with all mutual funds. I called majority of the mutual funds and I checked. They said they are not investing with Paytm or they don't have any information. Then my doubt went to foreign institutional investors. I don't have any access to FI data, so I was clueless. Eventually, I got a link from Economic Times in which it is clear that BlackRock and CPPIB, which is Canadian Pension Fund, are investing in Paytm. You're getting the point? Only to safeguard Paytm. Only to safeguard Paytm, BlackRock and CPPIB are buying in Paytm. But what is the message which is being passed to the retail investor is that somebody is buying Paytm. Somebody is buying Paytm, so retail investor will buy in Paytm. This is exactly what is happening in India. But did media have a chance to discuss this? No. They are completely compromised. Completely compromised. But whenever any big mess happened, the same media, the same regulator will come into the picture and try and prove that they are pro-investors. But the reality, they are nowhere close to investors. I collected some data. You know that I never speaks without the fact. Till 26 November, which is today, domestic institutional investors invested 47,267 crores, which covers the cash market, FNO index, FNO stock. 47,267 crores. While the foreign institutional investors sold covers cash, FNO index and FNO stock around 31,486 crores. Foreign institutional investors are very smart people. They sold it because they are accountable to their client. They are accountable to their own money. They sold it. They quit it to the tune of 31,500 crores. While domestic institutional investors bought it. Now, I don't have any information who are these investors. Are these insurance firms? Are these mutual funds? Is that LIC or some other domestic institutional investor? So I don't have that granularity of information, else I would have told you. But whosoever, it's a retail investor money. Are we really aware about in which stocks they invested? Did this 47,267 crores, as per public figures, is a part of the money invested in Paytm, Fino Payment Bank, Nikia, Policy Bazaar, all these loss-making companies? We don't have any information. Soon we have these information. This is the reason why Indian markets are always misguided. Because Indian markets are completely unaware that what the hell is happening right away. There is no information in the public domain. Even if there is information in the public domain, the media will never let you know. So this is again a fact that 47,000 crores is being bought up by domestic institutional investors, while 31,000 crores is sold by foreign institutional investors. They sold, quitting. DII bought and pumped your money. Tomorrow is Saturday, Sunday. You will hardly see a single news channel who deliberate on 7.5 lakh crores worth of investor loss. Wake up, guys. I'm telling you, sooner or later, India would be controlled. When I say India, it means the capital market, not the government. India would be controlled, would be in a control of private equity and venture capitalist firm. It is already. And they would become richer, richer, richer. and a regular investor would be poorer, you know, irrespective of knowing that Nikia is having a negative retained earnings, Fino Payment Bank, Paytm, Policy Bazaar, Barbecue Nation, and many other stocks, their IPO are approved. But here investor is not concerned. Here everything is legal. Existing investors in all these companies quitted and replaced by the Indian retail investor. This is legal. It is not bad. It is legal. And we do not have a data how many thousands of crores, not 1-2 crore, thousands of crores worth of profit is being made by these venture capitalist firms by quitting these startups. And of course, replaced by the Indian retail investor. This is Rahul Magan from Treasury Consulting Group. You know my personal number, +9.